Let's bring on board Dr. C.K. Narayan with his dose of chart checks. Dr. Narayan, what do you have for our viewers?
Good morning again. Yes, welcome to another chart check with me, C.K. Narayan, where we look at stocks from both a technical and fundamental point of view. And today I have for you stock Bodil Chemicals, where all of us are aware that China is the main trigger for most of these chemical set of stocks, and that story is well known so far. But I think what has happened recently and what is really reflecting on the charts is some of the recent developments within Bodil Chemical. China, for example, has now reached out to a point where they, there is a talk that they may actually outsource things out of India, mainly because their plants are either shut down or under severe restrictions for pollution. Now, that could act as a pretty good trigger, and if you look at the charts of Bodil Chemical, what we will find that the stock has fallen down to a very good retracement support. It has actually fallen off about 45% from the high price that it had reached a little while ago. And then if you do a measurement, it has retraced to about 50% of the last upward signal. What is more is that at the bottom of this particular fall, it's created what we call as a double bottom kind of price pattern. And what is interesting also is that this double bottom price pattern has an upside breakout which is visible on the charts. Now at the bottom we are also seeing some momentum divergences which are indicative that the selling has eased off and that possibility of a durable bottom getting formed is now increasing. On the fundamental side, we are finding that there is improved pricing, there is backward and forward integration which has been which is a little unique to Bodil Chemical actually, as well as vertical integration. So collectively, I think the charts are currently reflecting all these positives. Bodil Chemical seems to be the best position among all the stocks. So if you look at the charts here, you're seeing a nice big move upwards which lasted all through 2016. The results for 2018 were a bit flattish. We just had them declared last week. But then that is what brought down the, the trimming of the prices. The prices of chemicals had also eased. But then now with the retracement at about 50% of the whole rise and the momentum also changing over to somewhat of a flatter trajectory, I think Bodil Chemicals is creating a bottom here which could be, actually bought into. I think at the very minimum, we should see Bodil Chemicals go back to about 180, 185, which was the previous high. So that's a 30% upside. The second stock I have for you today is Dwarikesh Sugar. Now, you may wonder why Dwarikesh Sugar when all the sugar stocks are taking such a beating. Yes, Dwarikesh Sugar is also at the end of a big 7-month-long decline, during which time the prices fell from 90 rupees to 18 rupees. Now, the trigger here is also coming from overseas, which is Brazil, which is the largest sugar producer in the world. In Brazil, most of the capacity in sugar is actually moving to ethanol. 66% of all the sugar mills are currently engaged in producing ethanol, whereas only about 30-35%. So that itself should create some upside traction for the prices in sugar. That is what is the belief going ahead. And within the sugar space, I think Dwarikesh Sugar is very well placed to benefit from a recovery in the sugar cycle. It's one of the best mid-sized sugar companies in India with an extremely light amount of debt on its books. And even recently, if you look at the results, though quarter 4 was a little weakish or flattish, it did very well up to 3 quarters of 2017, but sugar prices have peeled back from about 37 rupees to around 26 rupees, and their cost of extraction itself comes to 25-26 rupees. So all sugar companies are hurting. What you see on the charts is a few things which is saying that there is a recovery over a 7-month resistance trend line. So that's your first signal that things are about to bottom. And the second thing would be that the momentum at the lower end is actually easing off quite a bit, which is not surprising considering that stock has fallen so much, and at 18 rupees people may not be overly enthused to sell into this stock, but it has just marginally recovered to about 23-24 rupees. So I think at this level it seems fairly low risk. At the worst, it might just consolidate, but I think if it improves, it has room till about 50, which means you're actually looking at a potential 70 to 100% kind of return in Dwarikesh Sugar.